Hi, everybody. This is Jeff Barton, and welcome to the Mortgage Minute. It's Friday version, and I am going to get right to it. Okay, the lots of bad things going on today. Um, Interest rates shot up big time. Inflation news. That's the problem. Things cost more, so therefore rates go up because people are scared and they're not quite sure what's going to happen. Rates go up. If things continue to happen as they are, rates are going to continue to go up, and that's going to kill a lot of things. It's going to kill the real estate market. It's going to kill the lending business. It's going to be bad. So here we are, 30-year fixed, 5.85%, 5.85%. That's almost 6%. Think about that. At the beginning of the year, it was 3%. 5.12 for the 15-year, 5.50 for FHA. The jumbo is at 4.95, and the 5/1 ARM is at 4.95 as well. The 2-year is at 3.051, and the 10-year is at 3.159. Now, we've seen some retrenchment or some volatility in these treasuries, but in the bond yields. But we'll have to see exactly what happens next week. It could be that the 800-point drop today in the Dow will actually reverse itself. It's done that quite a few times during the last couple of 3 weeks, but we'll see. There's this inflation news doesn't get better; it gets worse. 8.7%. Core inflation was also up. I think 0.3, something 0.3, 0.6%. Anyway, it's bad. And so if you're out there and you're looking for a house, you have to consider a lot of things, right? Prices have increased in the real estate market in terms of what we're expecting them to continue to do, although we have seen some prices drop in some markets. I have 5 of them. Detroit, you can still buy a house under $100,000. Dayton, Ohio. I've been to Dayton, Ohio. It's a nice place. You can still buy a house there under $100,000. Birmingham, Alabama. Haven't been there. Jackson, Mississippi, and Huntington, West Virginia. All these top 3 cities are the ones that are having houses that you can go out and buy under $100,000. It's not bleak everywhere, but it's bleak in places that most people live. The inflation, as I said, 8.6%. Yikes is the word I wrote down next to it. Kiefer. Len Kiefer over at Freddie Mac says that it's going to take longer to sell a house. It means that there are a few buyers out there. Now, inventory is up. Yes, it is. It's up 13% this month, year over year, and that's a good thing. We want to see more inventory, but we need to see prices retrench. And as I said during the last show or the radio show or some show, it takes about 6 months for sellers to really understand that, hey, the market has changed and we need to lower the price. Some astute real estate agents will be on top of it, but that's, most sellers look at real estate agents who want to lower the price and say, hey, all you want to do is lower the price so it's an easier sale for you. Yeah, that's true, but the market also changes is also true. So we'll see where that is. Consumer expectations that things will get worse is at the highest time it's been ever this May, and it's probably going to get worse before it gets better. These are all the things that are happening within what we can see. Purchase apps down 40% from their peak. That's like I say, it's bleak out there. However, some of these mortgage real estate prices, mortgage interest rates aren't as bad as you think. So 5.85 or 6% mortgage interest rate, which it is for a 30-year fixed rate loan, that's I just can't help but keep saying it. It's tough out there, and it looks like it could get a little bit tougher. Anyway, I'm Jeff Barton. This is the Mortgage Minute. It's Friday.